Hi, it's Kristin Jamieson with Success Mortgage Partners. Today we're going to be talking about why you don't want to buy a car, truck, or van unless you want to be living in it in the mortgage loan process. It absolutely can affect your home buying chances in a few different ways. So one way that it can affect your chances of being one, approved for a mortgage, or two, closing on your new home mortgage if you're trying to buy a car in the process is that payment. Not necessarily the amount of debt. So a $27,000 car versus a $100,000 car isn't going to matter in the whole scheme of things, but it's the monthly payment that goes along with it. That monthly payment is going to get calculated into your debt to income ratio. And some programs have higher debt to income ratio qualifications than others. But if you were pre-approved without that mortgage payment and you were already looking at homes maybe at the top of your budget, buying a new car could affect your qualifying, because we will not close a loan that doesn't meet the debt to income ratio requirements. Another thing that it can affect is your funds for closing. So sometimes when you buy a car, they require some sort of down payment to get into the vehicle, and that may have been funds that you had set aside to buy your new home for your down payment or your closing costs. And if you don't have those funds available to you, you may not be able to close on the home that you're looking to buy. Well, one thing we can do is we can always look at the numbers and see what you could qualify, what you're looking for in a home, what that equates to in a payment, what you need in a car, and see, kind of what that payment equates to into the debt to income ratio process. Ultimately, every $50 in a monthly payment can affect your buying power in a mortgage by about $10,000. So if you get a car payment that has a $200 monthly payment, you may have just limited your buying power by $40,000, and that's a lot of house. So really it's just, what you need and what works for you and your family, and we can kind of reverse those numbers to make it work. Another thing you're always going to want to take into consideration is when you go to buy a car, that is going to be a credit inquiry, a hard inquiry on your credit. And oftentimes we see car dealerships that sometimes have pulled your credit 10 or 12 different times trying to come back to you, sitting at the table with the best possible rate or the best possible payment for you. Your credit score that we had pulled in the pre-approval process, or if you come to us after you've purchased a car, the credit score after that hard inquiry could be substantially lower. And then in the mortgage process, interest rates are calculated based on credit score, a large majority of it. So you may end up paying a higher interest rate because buying the car had lowered your credit score. So there's just a few things to take into consideration and seeing, what you and your family really need going forward. Well, that goes back to, if you pay cash for the vehicle, it's not going to affect your mortgage loan whatsoever, because we're not going to see it on your credit report. But making sure that you have set aside enough assets or funds for your down payment and closing costs. Don't deplete those in paying cash for a new vehicle. There really isn't a difference as far as when you're getting into a new home qualification. We're just going to take the monthly lease payment or the monthly car payment, and that's what we're going to use in your debt to income ratio. Now, going forward, say you've had a lease for 4 years and your lease is about to be up, and you weren't going to get a new lease. From an underwriting standpoint, though, we would still have to count that lease against you, even if you only had a couple payments left, because unless we could prove to the underwriter that you were paying cash for a new car, we would expect somebody that had a lease to go and get a new car, because you have to have a car to get to and from work. If you have any questions on the mortgage loan process, or things that you shouldn't do or should do while getting pre-approved or in the loan process, don't hesitate to reach out to myself and my team. 352-242-1535. Thanks.